Well, switching topics, we're looking at the current situation with tariffs and inflation. We're joined by Brent Wilsey, president of Wilsey Asset Management, with more. Brent, good morning.
Good morning. Good to be here.
Okay, so you were just telling me you came up with all this stuff and wrote it all up on Wednesday, and everything kind of the switch.
A lot has happened since Wednesday.
Got switched.
Yeah. And the good news is still there. I mean, the short-term inflation compared to last month, CPI was 2.4%, came in, same as the estimate, 2.4. Core CPI, because they back out energy, they got gasoline and food because it's just too volatile, so they try to give people a better number. That was 2.8, below the estimate, 2.9. Now, we like to look longer term, because that's month over month. But longer term, energy was down 3.5%. Gasoline was down 12% over last year. So we've had some good
Not in
things.
California.
Well, yeah. I was going to say that. Without California, we're a whole different segment, but we look at the obviously the nation. But yeah, California, we got the refinery issues, we've got the taxes. It's crazy here in California. A whole different inflation here in California. But we seem to be stuck at a core inflation at 2.8% going forward. You know, March, April, May were pretty good because of the tariffs. We don't see any concerns with the tariffs. But gosh, since Wednesday, a lot of things have changed, which is going to change inflation. And for investors and consumers going forward, it's getting a little bit dicey.
So we're talking about a volatile market.
We could be, yeah, because we had the Fed come out on Wednesday, and Chairman Powell, he talked about, well, I'm not, and he kind of said, I really don't know what's going on going forward. That's kind of what he kind of said, because he doesn't know. It is very confusing. The tariffs have been out for a while, but we still don't know if there's going to be more coming up. July 9th is when I believe these typical tariffs ends. That could change things dramatically. We also had a good news. We had retail sales. Consumers still very strong. They're out there spending. I mean, retail sales came up 3.3%. If you back out food and energy, or mostly energy, it was like up 4.6%. So consumers out there spending, they feel good, they got a job. And then just last night, this threw a whole ringer, was the bombing in Iran of those three sites there. I'm concerned now, will that change energy prices? What if Iran comes in, or somebody comes in and hits the Strait of Hormuz? I mean, there's a lot of things that can change. So if you're a good investor, you got good quality investments, you don't overpay for them, you're going to be fine. But those speculators that have those high risk, high price investments, I'd be kind of worried.
Well, you mentioned the Strait of Hormuz. We were talking to Ron B this morning. I had a discussion with him. And what if Iran, as you said, tries to close down the Strait of Hormuz or mines it or something? 20% of the oil coming out of Iran goes to China.
Yeah, I do believe the United States has put a lot of protection in there. They're prepared for this. They've done things very well, but doesn't mean there won't try to be some activity which causes concern and volatility. So you just have to be very careful. But it's a crazy time, and this is a war called the Russian-Ukraine war. We don't hear about that anymore, but that's still going on. I mean, there's so many things going on in the world right now. It's a little bit concerning. I think we'll get through them, but I talked about a month ago, waiting for the other shoe to drop. Maybe this will be it coming in July.
Okay, but you don't want to sit the market out because of this.
Well, if you got good quality investments, again, we have in our portfolios things that will benefit from the rising energy prices. You've got to have that balanced portfolio, because we've never been a seller, oh, panic and sell. Warren Buffett never did that. You just don't do that when you're investing. But you got to make sure you got that quality. You ride the storm. That's why you buy quality investments, because, yeah, they'll probably go down in price, but they'll recover. And what if everything's fine? What if, you know, Iran doesn't counterattack? I mean, they've been hit pretty hard, and the president said they will hit them even harder if they try to retaliate.
Chances for a recession?
At this time, 0.
Okay, good.
Yeah.
I think that's what the average person wants to hear.
And what could change that is that if the consumer does get scared and the consumer pulls back, then that could cause a recession. But right now, no sign. The consumer is saying, shame that's happening. We'll see how they react to this new Iran situation. But consumer, I mean, gosh, retail sales, food and drinking places, they were up 8.8% year over year. People are still going out drinking and going to restaurants. I mean, gosh, I was on the freeway going to my daughter's house in Long Beach, and like, gosh, the freeway is packed with people. Yeah. I mean, people are still out there spending. If that continues, no chance of recession.
All right. Brent Wilsey, Wilsey Asset Management. You'll be back soon enough, and we'll see how things have changed.
I'll keep you posted.
All right. Thanks, Brent. All right.